The US debt ceiling will be the main topic and the issue of the week. And looking at the chart, we can see that there is tons of support below, very little resistance above. Relative strength index turning up from a low point in the long-term chart. Everything indicates a possible rally this week at Nasdaq and in the US markets. All will come down to the debt ceiling and of course the things we cannot control. Except from this, there will be tons of quarter results coming this week and a few other economic indicators. You are listening to Trading Tips with Jim, and we are heading into week 19 of 2023. Last week I predicted that it would be a volatile week ending red, but Nasdaq made it for a slight green, up 0.07%, and it was Friday and Apple numbers bringing the Nasdaq up in the green. Before that the market was down more than 2%, but one good day made for all of it. But as you know, most of the stock fell, while a few of the major tech stocks had a good week over week. One of the stocks that did somewhat good was Nvida, and as you know, in last week I told you I would try to get Nvida at a good buying point early on a Monday and ride it through the week, as everything was indicating that Nvida should go upwards, and Nvida went upwards and looking even better for the week ahead of us. But there is tons and tons of things happening during the week. We will have a quick look at the charts. We'll look at some signals before getting to some of the stock tips. During the week there will be, as I said, a lot of quarterly results, and they are coming in on the lower end. And if you look at what Warren Buffett says, he has been selling billions worth of US stocks lately, even a part of his Chevron holdings. He expects many of his companies in his portfolio to give less revenue and profit in the forthcoming quarters. And looking at Dow Jones, Nasdaq was slightly up, driven by Apple, but Dow Jones actually fell by 1.24% last week to 33,674 points. How will this continue? What are the typical things when market get into a rally? Well, the first thing that will happen is some of the medium stocks will move the fastest. And during this week there will be tons of these sorts of stock coming with quarter results. Tyson will come today. Lucid, PayPal and Palantir will also be today. And it just continues during the week with different. We have Rivian coming up on Tuesday, I believe it is, and Beyond Meat for those who wonder how artificial meat is doing. So Beyond Meat will be on Wednesday. Robinhood, Trading Desk, Disney, Wendy's also coming on Wednesday, but as you see, these are not some of the real major heavyweights. Many of these stocks should have a rally. I think I saw DraftKings coming in on Friday, and if you look at the chart, you will know that, or the results, you will know that DraftKings had a very nice Friday, closing Friday. Everything indicating, by the way, that it should continue upwards during the trading day today. So these companies, many of these companies should, if we head into a week where the debt ceiling is lifted without too many issues, can prove for a strong rally, and especially in many of the stocks which I mentioned. Oil been hammered lately. It was on a strong upturn. OPEC Plus cutting production, and then everything was looking good, and then some more numbers came in indicating that we are heading for a recession, and again the oil was brought down. The correlation is like such: if the world is heading for worse economy, there will less consumption of oil, and that brings the oil price down, and the opposite. So what will happen if the debt ceiling is lifted and everything indicate that we will head for a strong market again? You should expect also oil to go up. During week over week, since last week, oil fell $4 to 72, but was traded down at 67. I used the chance to pick up a few oil stocks being that low, and hope maybe you did the same, because there is no reason oil should be so low. We know we are heading for a much worse economy, but war is also prepping up everywhere. This, along with cut in the oil production, indicates that oil should be on an upturn. And if you're lucky, everything blows away. Economy remains strong. Last week's job numbers in United States was much stronger than the market expected. Of course, some will argue, look at what they did with the February and the March number, adjusting down the numbers. So how much can we trust these numbers? But there are signs that the market still is strong. And what if everything blows over, we get back to a normal world, normal economy, then oil again should just push harder. So in my opinion, and this is my opinion, only oil still is a nice place to be. Gold, which we also follow, I told you for more than, I think it will be close to 2 years now, that gold is a place where you want to be. I personally invested into gold, both physical gold and gold stocks. Barrick Gold being the gold stocks, by the way. Now, gold had a good week last week, up $30 to $2,029. It was touching all-time high. Everything indicates that gold should also continue to push up. If the markets go up, you can expect gold to push a little down. And especially if some of these core inflation numbers come in on the lower end, you can expect gold again to push a little down. But the general tendency and trend is for gold upwards. The target remains still the same. 2,500 is the target for gold. I think we will head there. It's just this timing issue. Have I been able to make money out of the gold prediction? When I first started to tell you to buy gold, gold was at 1,600. So yes, indeed, it has been a good upturn, but more than anything, I've been using gold as a hedge. What if markets have a total collapse? This may happen. Why do Buffett sell off so many shares? Why do so many experts say that we're heading for a really strong economy, downturn in the economy? And that even the stock market may face a brutal fall. You also heard me argue over this for a long time. I have my personal targets for Nasdaq. I think Nasdaq will have to go down to 8,000 before we find a finally bottom. That doesn't look very likely as is. And my latest prediction was that the final bottom will be reached by May 27. How likely these things are remains to see. What I just said in the opening of the podcast is that if you look at the chart, everything is brewing for an upturn this week. What I really like especially much is that strong support below. Nasdaq been trading up and down between 10,500 and 12,000 now for months. Upon months, building up huge portion of accumulated support below. Little resistance up to 13,000 mean that just a small thing can fire up a mini rally, and everything indicates it might happen this week. But I also know when we are at this situation, it just takes a small thing to bring us into the real red. If you are not sure, like I have been for a very long time, I told you that I believe the market should go down. Started more than 2 years ago saying that, okay, we will ride the COVID rally, and when we hit 16,000 on Nasdaq, I started to offlift my shares because we were heading for a fall, and finally we started to fall somewhere above 16,000. Markets started to fall. And at this time, I also started getting into gold, as I told you, to hedge. So if things go really south, the gold will hedge up. I will not be in that dreadful fall, because I do know that many of you only have a few shares, a small holding, and you are riding the ups and the downs in the market, and especially Nasdaq's up and down. If you have a little size of your portfolio, you should think and invest a little differently, having a portion of your portfolio in somewhere safe positions to hedge for bad times. And you can gear up like I do when I think market is starting to look really attractive. I just increase the percentage of my money which is invested into stocks, etc. I see crypto is running up and down a bit, has been doing for a little while. I think that meme Pepper coin is on the air, but you shouldn't be fooled by all of this. I got a question for a user: do I think crypto has strong potential? Like I've been saying for some time, I have crypto, a small part into crypto. I used the chance when it was falling quite much to buy up. Currently I'm sitting just in a slight profit of the crypto trades, but we will see where it will end. Right now things are looking better for crypto than it was just a few months ago, and the thing is, if things turn, crypto will suddenly just take off and it will jump instantly very high. It will be the same thing. We saw Bitcoin move very fast from 17,000, I believe it was, up to 30,000, doubling your money. I used the chance to buy a few Bitcoins down at 20,000 for instance. I bought a 30-20 sitting at an average. Currently it's trading somewhere around 28,000 if I'm not mistaken. So we know a lot of quarter results is coming this week. How can you trade these stocks? Again, I will recommend you to use our page stockinvest.us. Go to your ticker. There you will see how did the stock do before, under and after quarter results. It can give you, it's not always correct, it can give you an idea, and of course use any other source that you have. Some stocks tend to do the same. Either go up just before quarter results and then get hammered on the quarter results day. Example I saw last week, I believe gold, Barrick Gold maybe was it, had very good quarter results indeed. Stock didn't move much after. Anyway, this is how you can trade stocks, because I know many of you want to know what sorts of stocks should I trade, trying to make some green in my portfolio. You can trade the quarter results. It's a very risky strategy because usually they move a lot during that exact period. A few days before, during and after quarter results, you just have to hit correctly. And in order to hit correctly, you have to do that slow thing of reading a little bit about quarter results. What did they say in last quarter for the expectation for this quarter? How much have they gained or lost since last time? Is there a potential upturn? Petroleum will be on tomorrow, I think. I'm not sure if it's for before or after market. You can check that yourself. But I believe you can see some reactions into Occidental even today, for sure, tomorrow. The other thing, which I've been repeating now, I feel tons of repeating, but in a market like we have been and are still in, I would go for low relative strength index. Solid stocks is such an easy indicator to use. Anyone, you don't have to have any technical background or anything, you will understand it instantly. Relative strength index, how it works. Find stocks at stockinvest.us. We have tons of lists showing these things, so you can go there and it will generate a list for you and you can look at the stocks. But remember to use liquid stocks. Do not mess around with illiquid stocks. Stocks that have a low on relative strength index. In a few minutes I will show you the Nasdaq chart for those of you who watch the video format. For the rest of you, I will try to explain what we see. So there you will see that Nasdaq is at the lower end of the relative strength index, and usually then you will have an upturn. It's maybe the easiest of all of the indicators to use as a momentum indicator, and easy to use. and some of your trades will go the wrong way. But overall, it will most likely give you a better hand when trying to pick stocks. Just buying a stock because it's moving is seldom good. If you do that kind of trade, many people do that, they just try to jump on the hype. Then you have to for sure use volume, see where the stock is at. Is it peaking out at the volume? Is it in the early phase of the volume? Is there still potential for more momentum, more upturn? I like to mention our signals, buy and sell signals at Stock Invest. We analyze more than 38,000 tickets in total. I think some between 26 and 28,000 of them qualifies for signal giving. Looking at this can be often give an indication where we are, and if you are a regular follower, you know that when they have been very low and I say that this is a typical buying opportunity, or if these signals have been very high, I sell it's a typical sell signals. And you have seen or heard for yourself me mention these numbers, and we have seen in more or less all cases the market react just like it's supposed to do afterwards. Currently around all the stocks that we analyze, some 20 plus markets, 30% are giving buy signals. We are not high, we are not low, we are somewhere in balance. If we go to Nasdaq, only 25% of the companies is giving buy signals. This is not very low indeed, it's almost in balance, but it's on the, I would say, the lower end. Here comes the twist. When it's a number like this, you can have a situation because we know that most of the stocks are negative. Yes, Nasdaq finished in a slight plus last week, but the major of the stocks were, like in the previous week, falling. And you probably know, because you have a portfolio of Nasdaq stocks, so you know that your stocks struggled. Some of them had a lift on Friday, but in general they were struggling during the week and last week. While Nasdaq been doing somewhat okay, but driven by some of the absolutely major companies in the index. At the same time, as I said, it can fall, it can brew for that lower part. It shows that there is a sort of negativism in the market. But if we are, like the chart will show, at the lower end, we get a somewhat okay deal around the debt ceiling, market take it very positive. This number give you a huge upside because we will not get into overbought territory before we are hitting the high 30s, 40s. That's where we'll start to get into the place where we assume that there is too many buy signals, market will soon have a cool down. So plenty upside on Nasdaq, same thing on New York Stock Exchange, 25% buy signals. London 27, while Tokyo is high at 43. Shenzhen, China is down at 20. Those remember China was very, very high. And as I said, they will have to take a brutal fall. They did, and for weeks and weeks been on the lower end. We'll quickly jump to the chart and see how the chart looks like. I promised you slightly change the format of the podcast, and we will. The podcast is slightly coming to an end. As I said, we are this format of the podcast slightly moving over to two different things. There's mainly two things I like to change. First off, I like to be a little bit more personal. The other thing I like to do is also start up the new portfolio. Doing what I did so long time ago when I first started trading back in 96, I had just a few $100 and started with a little risk investment. I think, as I said, and I argued for now in almost 20 minutes, markets looks like they can have a huge upturn, and I believe we soon are there, where it is typical to go with a little high risk. And if I'm able to do anything like I did back in 96, get back to that strong success rate which I had then using one very simple technique, we'll get back to the technique in later podcasts. Hopefully I can show you a new journey, and we can make, or I can make some strong gains. You will have to decide yourself, as you always should. Always decide your trades. Don't let me or anyone else pick the stocks for you. Use it purely as advices. It is opinions, it's an advice based on some experience. Sometimes it will be wrong, for sure. And I've been wrong many times, and right many times. The portfolio which we currently are running is in hefty green, but there is no guarantee that it will continue to be in green. Make up your own mind. Learn as you go. Learn technical indicators. Learn how to read news. Occupy yourself more around your investment decisions. It can only benefit you. So yes, I will do these two things. Restart that portfolio, and as I said, I think maybe the bottom will be at the end of May. So somewhere in the very beginning of the summer, I want to start up that mini portfolio. Last time I did that was 96, first getting into trading, having $450, and that made for a strong success. Should it be 450? Should it be 1,000? Should it be 10,000? Should it be 100,000? We will look where we'll start. I want to create a portfolio which most of you can relate to in size and scope, but we will get back to that in later podcasts. Being personal is just because I want to make you understand that it's very important, as I've been keep nagging about having a solid base, because trading is such a volatile ride. Investment and trading, you will be up sky high some days and rock bottom so many other days. And if you look at it, it will correlate with how the stock markets move. And usually, because there is a delay between these two phases where things go up and they go down, you will be stuck in a pattern where it's very easy to lose money because you do bad decisions. So the better anchor you have into solid things outside trading, the better it is. So either if it's going to the movie, you have to do something which give you some pleasure, some basis, some solidity. The other thing is, of course, reducing your risk. Do not play with money. You cannot lose. That will make you sleep much better. And when you are not trying every time to get back your previous losses, your decision making will be so much better. So being personal is just, it's not I'm going to tell you my life story. Some of it is interesting, some of it is very boring, like in all lives. I have been in Afghanistan, I've been in Lebanon, I've been in Kosovo, I've been doing mine bomb defusal, so I have a history alongside trading, of course. But the things I've been sharing lately is more me doing metal detecting. It's a hobby which energizes me a lot. I like to go to the gym as well, but hunting for coins. And there are so many similarities in metal detecting with stock market. You have to find the good fields. And the good fields is either the sector in the stock market. So you have to find a good field to increase your chances for success. So tons of similarities. Last week I found many coins, but really nothing very special. 1829 I think was the oldest one, but it doesn't have any real value. Some nice seals, lead seals, and a few other items. Silver coin was there as well, but none of them having some real value. The most valuable pieces I found was actually some pieces of an old Jewish stamp. Could be from a book press or something, but it was broken in pieces. Still highly collectible. History is something many people like, and for those who can read, they can read what it says on the backside. I'm not that thing. So what I will do, I will clean up the object using ultrasonic sound as good as I can. put them in my treasure box, keeps me happy for rainy days. But enough about personal stuff. Let's get back to trading. Finish this podcast with the charts of Nasdaq. And of course what I've been trading and where I put my money lately. In front of me and on the screen for those watching the YouTube version, I believe it also is video in Spotify as well. You will see the long-term chart of Nasdaq moving totally horizontal, up and down, such a boring movement. There have been a few good trading opportunities. These trading opportunities have been when the relative strength index been in the oversold territory, mainly, and when they've been in the overbought territory, when they are simply too high, giving that obvious selling point where you should go out. Right now, relative strength index turned at 43 in the long-term chart. That is not very low, so it's not like super classic, but what I want you to pay attention to is below on the right side of the price line. You will see a strong gray bar, and this bar is more or less totally gray. It's all the accumulated trades below. It's just a ton, like a massive wall of trades. Has to be extremely drastic news for this to be broken very fast down. It can hammer day by day if the market gets very negative. It can hammer its way through the support for sure, but look at the upside. It's way less distances between the bars, all the way up to about 13,000. It just needs to knock up to 12,500, and then it should just stumble day by day upwards to 13,000 and even 13,500. Hardly no resistance at all. Buy signals from the long-term moving average crossing the short-term moving average. Buy signals from the long-term moving average at all. When it crosses, it is called golden cross. Don't confuse it with the star. The star is special made by me, needs more conditions than this. I think Apple or Microsoft had a golden star. You can go and look at the chart and you will see what the golden star is. A different thing. It needs a better condition than this. But this is what everyone refers to as golden cross. Short-term moving average is giving buy and sell depending on its very, very short term. Looking at 3-month chart, we can clearly see that there is no real resistance above, good support below, and more or less similar to the long-term chart. So this chart says that there is resistance where we are now, but it just needs a little push. And I think debt ceiling, lifting the debt ceiling can be the push that the traders are waiting for. It can be a sucker's rally, of course, just bring us up before it will be a hellstorm downwards, but we will get there later if and when it happens. Before rounding up the chart, heading to the stocks, let's have a quick look at Bollinger Band. So what is Bollinger Band? It's an amazing tool, if you ask me, and at stockinvest.us we made it easy for you to understand, color green and red when there is a buy and selling opportunity. The best thing about Bollinger Band is that you can have something called a squeeze. It is when the Bollinger Band gets very, very narrow. Usually then you will have a breakout either up and down, and Nasdaq is getting closer into that squeeze. Now we will see, will it break up? Give a strong buy signal also from Bollinger. Usually I always end that part of the section with concluding, will it be a green or a red week? Last week I told you I thought it would be a red week, but Nasdaq was saved by Apple on Friday, ending slightly green, 0.07% for Nasdaq. Dow Jones fell, so Dow Jones fell more than 1.2%. As I say, it can go both ways. It will be again a volatile week. I have a feeling that we might end up in a mini rally, bringing Nasdaq up anywhere between 3 and 5% during the week. It's such a good chance for that to happen, but it will be volatile. How can you play it? Well, I will tell you how I will play it. You will have to make up your mind. From previous, now, if you're a new listener to the podcast, I have several portfolios, strong oil portfolio, which I had for a long time, including Norwegian stocks like PGS, which I got back at 130, currently around 750, and a few other stocks and different other portfolios. But in this trading podcast series, I have one that we follow and been following very long. I give you all the numbers, tell you exactly how it's moving. Last year, I went back into a small company called Zomedica because I've been trading Zomedica many times and done it very successfully, taken many. I told you it would be a risky trade, the one trade that we will do without any stop loss because it's such a penny shit stock in general moving. What I really like is that they have so much money in the bank, but they've been slowly moving. Still, we are sitting in a loss, and now they will soon have quarter results. Let's see if it moves this time. But that stock stays and will stay for a long time. I will watch the quarter results, see how they are spending their money, because last time they had at least 1.8 billion in capital. So they had plenty of money to spend, and they've been buying up a few companies, trading at some 0.21 or something like that. It's a stock most people can afford, but don't confuse these things about 0.21 or $178, because many places you can buy a fraction of a share. And there is nothing saying that a stock at 0.21 is cheap, a stock at 178 is expensive. If you have that idea, then you look at stocks in the absolutely wrong way. Market decides what is cheap and what is expensive. You should use other indicators. What we do know is that when stocks get too high, they get slower to move. That is the reason why many do a reverse split, like Tesla been doing, splitting the stocks a few times, getting down to the levels where they are now, because when you are about 2000, it gets harder and harder to trade. But some brokers offer fractional trades. Now, so Zomedica will still stay there. Do I think it's a good trade? Yes, I think it's highly risky, so you should consider yourself deeply before doing it. Then in week 7, we went into Northrop at $468. Hasn't paid off yet because currently down 4.71%, and the profit being up and down, being in profit, then a little bit down. But as I told you back then, and as I will keep, they profit from the war, and war is just popping up everywhere. You cannot read a single news without reading about countries increasing their defense budgets, etc. All this material has to come from somewhere. While talking about that, commodities, raw material, I think that you will see an upswing also in the raw material. They're scraping the markets for all the steel they can, and everything related to war. Industry, building tanks, building all sorts of weapons. Chevron was the other trade. Back then I told you I think markets will be very shaky. I don't want to sleep bad. I want to have a portfolio that can handle some ups and downs. So Chevron was the buy that we went into week 9 for $162. Currently trading at 160, was up at 170 plus dollars, but was taken by the all fall last week, bringing it down under 160. Oil is on the way up, so I think it will be back to green next week. Do I think Chevron is a good buy? Yes, I think it's a solid buy. It's not where you will make tons of money, but it can be a good hedge, like a part of your safe portfolio. So we had 3 stocks, Zomedica, Northrop, Chevron, and last week I told you I would try to buy Nvida because everything looks good for Nvida. It was time to add a little to portfolio. So I got into Nvida as well. Bought it Monday at 279.20. It was that 278 low, ending the week at 286.80, giving 2.72%, almost 3% profit for Nvida last week. Everything in the chart indicates that Nvida should continue upwards. currently I like my portfolio. It's a little bit slow because if we get into the rally which I'm speaking of, Chevron, Northrop will not be the main runners for sure. Nvida might have some opportunities there, and Zomedica should have some opportunities. But it's a balance I like. I told you we are on the brink of something. Doesn't mean that it will happen, and if it doesn't happen, my portfolio should handle it somewhat okay. I will not get into major losses. Then something has to happen. As I see markets getting better, we change to more and more higher risk. 35 minutes, that was the podcast for week 19. Next week will be week 20. I will be back, and hopefully I am right that we will have a good week at Nasdaq. And for sure I hope that you will have a good green week. I hope you will do some interesting things. I will have the chance to do a little bit more metal detecting during the week. I hope to do some nice finds. I hope to do some good greens in the portfolio as we are getting closer to the restart of the trading tip portfolio. Till next week, just have a super duper week and we will speak. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.